Good morning, everybody. Happy Monday. It's June 1st, 2026, about 8:40 a.m. Eastern Time. Great to be with all of you today. My name is Bob Lang, and it's time for Daily Bites. We bring these to you every Monday, roughly every Monday and Thursday morning, unless there's a holiday like there was last week. So last week we only had one Daily Bites. Talking a little bit about markets, the economy, trading, options, technical analysis, the Federal Reserve, any macro issues that are important that are influencing market movements and so forth. Trying to get you guys ready for the trading day and the next couple of days until we have the next bites, which will be coming up on Thursday morning. So, of course, Friday was the last trading day of May. It was a tremendous month for the markets. Nasdaq up close to 10%, S&P 500, and that's just for the month, not for the year. For the year, it's up about 19.5%. We'll get to that in a few minutes. The S&P 500 up about 5% for the month. Russell 2000 up strong as well too. Dow Industrials up nicely, but not quite as much as the others. We may see that change in the next several weeks, however. So often we see at the beginning of a month, money flows get a little bit stronger. So we may see some good, strong money flows coming in today over the next couple of days. Don't forget, this Friday is a big, important economic report. That will be the May labor report coming out on Friday. So the Federal Reserve will be taking a look at this one very closely, as it is going to help shape their decision on policy meeting coming up in a couple of weeks, and it'll be the first one where Kevin Warsh is the chair of the committee, and we haven't heard from him since being confirmed by the Senate. We haven't heard him speaking at all. We've heard some of the other Fed governors, Fed speakers out there talking about the economy and inflation and the Iran war and the effects of that on the economy, but we haven't heard from Kevin Warsh yet. So maybe we'll hear from him before, but nothing is planned yet. We may just wait until the next Fed meeting coming up. So one thing we have noticed over the past couple of weeks, certainly with the positive news that been coming out, the macro news that's been coming out, it's been perceived positive by the markets about the Iran war and oil prices coming down. We do see oil prices bumping up a little bit today, but oil is still under $90 a barrel. WTI, gold is down a little bit here. We are seeing rates rise today. We're seeing volatility up a little bit today. So the ingredients are there for a risk-off day, right? We have rates up, dollar slightly higher, oil up a bit, and volatility up. These are the ingredients that you normally see for markets to sell off. But so currently right now we're seeing there is a nice bid in the futures. Nasdaq up about 63. Dow Industrials up 131. We did hear some positive news over the weekend. I mean, if you want to call it positive news, but it was something that President Trump talked about, about IBM and the chairman and CEO of IBM doing a great job and thinking that the stock is going to go much higher. And so, of course, what's happened, the stock has a very strong bid this morning after it had a really strong day on Friday. It's up another $30 today. It was up about 30 on Friday. So, this is the market environment that we're in. So, don't sit back and complain about things. Just understand it and try to find your opportunities where they're out there. That's what I'm doing, and sharing it with the chat room as well too. So let's see, end of the month, right? So we always talk about the end of the month as a marker to tell us whether we're in a bull market or a bear market. I think we all know the answer to that question, right? Let's take a look at the S&P 500 chart on a monthly basis. And what is the criteria for this? So criteria that I've used over more than a dozen years is to see whether the MACD is stronger or weaker and portraying a bear market or a bull market. So with the bounce in March off of the red line, so you saw the black line almost crossed under the red line in March. it saved it like right at the end of the month and pushed right back up again. So when the black line is above the red line, we use the bullish playbook, right? When it's the other way around, we use the bear playbook. Right over here, with a couple of months, we had the earlier in 2025, we had a break below there, but we didn't confirm it. So that month over here of April of last year stands as a long-legged doji, which broke that the 20-week moving average, and another one as well too. So it's just up and away right now. And we are we overbought? Sure we are. But we've been overbought for the most part since August of last year, right? We were overbought on the RSI. And if you looked at that and said to yourself, well, you know, we're overbought, I shouldn't be exposed to equities anymore, you would have made a grave error, a grave mistake in judgment there, right? I want to remind everybody that an overbought reading is simply a condition, is not a signal, right? Signals tell you when you should be buying and when you should be selling. Conditions just tell you what the environment is like, and you don't necessarily have to react on that environment. What you can do is you can use some of the tools that you have, like reducing risk and adding some protection and raising some cash. It doesn't necessarily mean you have to dump everything. What it tells you means you have to be flexible and make adjustments when the market is telling you we're in these conditions, right? Because an overbought condition can do what? It can last a long time, and it can last a lot longer than anybody thinks it could. We could be overbought here for the rest of 2026, right? And if you make it a decision and say, look, we're overbought, I don't need to be involved in the market. Well, fine. You could miss out on a great 6 months, 7 months now left in 2026 of some great performance. So let's not make judgments about what the market should be doing, right? And that's what you're doing. If you're looking at an overbought condition and you're saying to yourself, well, I've read over years, and a lot of people have told me that smarter people have told me that I don't need to be involved in the market when we're overbought, then that could certainly run into a huge mistake. So certainly, again, like since last August, if you made that choice, you've made a bad choice, bad decision for the most part. So, and you missed out on some upside gain. So higher highs, higher lows in the chart over here. MACD is again positive, so we're using the bullish playbook right now. What is the bullish playbook? It means, you know, stay long, don't be too aggressive, use some puts, but just judiciously, not too much exposure to the bearish side. Find some opportunities to the downside if you can. It's a stock picker's market right now. I think you're going to do far better finding stock picks rather than buying the indices. Even though the indices are having a good year this year, I think if you're a stock picker, you're probably having a great year. And if you follow that pattern of finding good stocks as opposed to finding the best indices, best sectors, I think you're gonna outperform the rest of the market. So oil prices again coming down a little bit from recent highs, still elevated here. It's going to take a while to crack them down into the 60s. A lot of people are saying it's not going to hit the 60s. When you hear people saying that, then you know it's probably going to happen. But you know it's going to take a while. It was a really swift move up from the 60s up to over $100 a barrel when this war got started at the end of March, or end of February. So we'll have to wait and see how things play out over here. Gold is off a little bit. I think anytime a breaks 4,500 is a great buying opportunity. So we're at 45.37 right now. If we do break down below 4,500, I'm going to be adding some GLD. Silver's up a little bit here as well. Where are we looking at this week? We're looking at some earnings plays this week and some follow-through names on names like ARM Holdings, which had earnings a couple weeks ago, and the stock is ripping higher today, up near $400. NVDA is finally catching a nice bid. It's up about $3 or $4 this morning, up to about $215. Looking for a move above 218 and a half before I really get serious and start buying more NVIDIA. I have just small amounts of it right now, but I will be interested in buying some more above that area. Earnings this week. Palo Alto Networks comes out tomorrow night after the close. Tonight after the close, though, we have a big important name, which is a name that we've played quite a bit in the chat room and in the service. CRDO, CRDO is the symbol on that one. It's very strong. It's been strong for a while. Tomorrow morning, Dollar General, Victoria's Secret, Signet, which is a jewelers, and tomorrow night, along with Palo Alto, we'll hear from GitLab, Ulta Beauty, which got slammed last time around, but ELF came out with some good earnings recently. So maybe if that translates to good earnings for Ulta. Wednesday morning, MiniMed, Medtronic, Macy's, which has been on a roll thanks to my dad, who talked it up when we were in New York. We called him up and said, what's the one stock that you like? And I think Macy's was about $18.50, $19. It's now about 22. So kudos to my dad for a really great play over there. And I know that people who are on our New York City trip are thankful for that. Wednesday after the close, we'll hear from Broadcom, CrowdStrike, Five Below, which is a retailer who I like, and I'm going to be taking a look at that one. Viva, AI, C3 AI, which is a software company started by a guy who used to work for Oracle. And Petco will be out later in the day as well too. Thursday morning is an interesting earnings report. That'll be from Ciena, which is a name that I like, which has been very, very strong, along with some of these other optical names. And then Thursday, Lululemon, which has been a lemon for the most part for the past several months. DocuSign, Samsara, Guidewire. We'll hear from Planet, PL Planet, Rubrik, and a couple of other smaller names. So we're moving into another phase of earnings. I call it phase 5 in the next couple of weeks. And then the last couple months, earnings weeks of June will be phase 6 as we move into the end of first quarter earnings season. And then we move into the second quarter earnings season starting around just left for 4th of July. So it's going to be an interesting week on earnings, but also with economic data. Lots of reports about manufacturing data. ISM, PMI will be coming out early this week and on Monday and Wednesday, 2 reports for that. We've been watching that very closely because it's been showing some strength for the economy. And finally, the jobs report, not just Friday with the labor report for May, but also ADP on Wednesday, JOLTS tomorrow, and jobless claims on Thursday. So lots of data to chew through, lots of earnings to digest and figure it out. And again, we got to pay attention to what the market is telling us about this stuff. And again, money flow is usually strong first of the month, so we might see some of that flow into new names this week. So trade well today, trade well next couple of days. We'll talk about what's happening on Thursday. And if you're in the chat room, I'll see you guys there a little bit later on today. But if you have any questions on anything out there, just let me know. Throw it out there on Twitter or throw me a DM in the chat room, and we'll tackle it as we get them. So trade well today. Again, keep a lot of cash, keep some protection on, roll your positions, take some profits, yada, yada, yada. This is what we do every single day. Take care, everybody. Bye.